Hey guys, welcome to my channel. In this video, we will discuss my favorite swing trading strategy, which is using that 1 hour chart to capitalize off of smaller moves. Keep in mind, when learning new strategies, you have to take what you need. So everything that I present may not be for you, and that's okay. So you're going to take what you need and just leave the rest. What are you looking for at the end of the day to make that swing? And you're really looking for the same moves that you're looking for when you're day trading. And I know it sounds really crazy, but you're looking for the same possible setups, the same possible things. Is there a possible pattern? Like, do you think there's a bear flag, a bull flag, double top, double bottom? Is there something you think could be forming? And that basically, in that case, you would play the perspective other side of it. So for example, on Disney here, let's zooming in on Disney here, this kind of is like a little bull flag breakout. And with this level here, which is kind of a zone here, so it kind of rejected in this pre-market level here, went up there and it rejected it again in the middle of the day. And this was just our lunch dip, and it went to the 9 EMA, and that was it. A really strong indication to swing calls here is this hourly candle. It's the last candle of the day. And what it's saying is, okay, we rejected, what is that, 90.27 already. That took us to our 9 EMA. We bounced off of our 9 EMA and we broke the level that we couldn't break here and here. Anytime there's a level that price has struggled at several times, like especially this close together. So this is at 9 a.m. or whatever, I guess pre-market, so maybe 8 a.m. And then again at noon, it rejected that level again. Getting a candle to close above it at close, you swing that. You swing it because it's finally broken that level. However, swinging overnight, anything can happen anytime. So bad news can come out about Disney, anything can happen. So what you would say is, okay, this candle has broken this 90.27 level and our 21 EMA. So that's two things that are broken that are strong enough to use as your stop loss. So what you would use is either the same level, which I would recommend using the level in this case, or your 21 EMA. That's fine, either one. You want to use those as your stop loss level. So in the case that we opened and rejected this, again, we're down here or whatever, in the case that that happened, because it will happen sometimes, this will not happen, you won't ever be 100%, but in the case that that happens, this level is your stop loss alert. So since we did all of this entering off of a 1 hour chart, in the case that on a 1 hour chart, a 1 hour candle closes below this level, you get out. In the case that it opened and it's just tanking and tanking and tanking, then you might have to just get out without the candle closing. Like, it's going to be a test of how much time you have on your expiration and what you can stomach. Because there's plenty of times where it tanks and tanks and tanks, and then it bounces and makes a wick before the candle closes. So it's going to be what you can stomach. However, based off of that theory, this is kind of like a little bull flaggish or whatever, held above our level. Let's say we swung and it opened up down here. So we swung from, let's say 90.43, and we opened at about 91.66. This is a really decent move for Disney. And then it continued. So remember, our level that we said we would exit off based off of was this down here. Once this candle prints, you need to update your level. We don't want to just wait until price comes from down up here all the way back down here. So let's make a red stop loss alert. And that's what this is right here. So we'll say this is our alert for our stop loss. So it was here. Then the big green candle at open came in, and we're going to move our level here, because this is, I guess, the resistance from somewhere. So yeah, let's move it here. So you can either use this resistance level that it broke, which is now support, or the low of this candle. So somewhere in this area would be our, if this reverses, I need to get out level. And you already are in profit because it closed here. So you entered here. So you're already from here to up here. For most of us, the 20-40% group, we're out. We're like, okay, I'm done. But if you are in the case where you want to stay in your trades longer, you just have to find your level. This little red candle or red line that I'm using, that's our stop loss level. That's our stop loss alert. If price ever touches and holds below this, we need to know, like ping your phone or whatever, hey, you need to make a decision, and then you'll make a decision based off of how this is. This got close to our level, I'm not gonna lie. In the case, waiting for the candle to close was the right idea, because at one point, all of this down here was red. Buyers stepped in very, very strong and pushed it. It also pushed it above another level. So at this point where this candle is closing, so every time a candle closes on an hourly, we want to move this level up because we don't want to lose the profit we have. It would be crazy to let this come down here and we're like, dang, I don't know what happened. So either you're going to secure 20 to 40% each time, or you're going to have a respectable stop loss. And really, like, you can see what our stop loss is there. So if this candle closes, we're not putting it right here. We're going to need a way to fluctuate. The market had been running for 2 days straight at this point, so you need some wiggle room. So our wiggle room is going to be, now we're going to use this orange line, which is our 50 EMA. And remember, we were just saying the 50 EMA tells us, are we bullish or are we bearish right now? So Disney had fell below the 50 EMA, which made it short-term bearish. And closing back above it means that this is now our stop loss alert. Even if we didn't have a red line there, we're now using our 50 as our stop loss. So, and this was just a really good trade to stay in once it kind of like cleared, because it kind of went up here. You could very well still be in Disney right now. It wouldn't be like, it really wouldn't be a bad idea. However, at some point you're going to have to secure profit. So even if Disney keeps going, you're going to have to secure profit, because what you don't want to do is the market wakes up and realizes, oh, we're still in the bear market, and Disney opens down here over the weekend. So you don't want that to happen. So it's okay to take profit. If you enter here because you saw a possible pattern and you noticed that it closed above certain levels and all of that, you had a protected place of where you would cut your loss and everything. At some point, you have to take profit. I don't care if this keeps going and it goes back to $120. You have to take profit and find re-entry, because at the end of the day, the chart will have to take a break. And that's when you need to find your re-entry for your trades. So this candle right here, somewhere here it gave you re-entry. So definitely, like, figure out the fine line between, I have a profit goal and I need to I need to secure profit, because you can't stay in all these trades forever. I don't care how much time you have. You can always re-enter. So right now, like, ideally in real life, I would be looking for re-entry on Disney. Ideally, you would be looking for the re-entry, which could be a test of your 9 EMA. It could be a test of the level or whatever. So what you're looking for re-entry, like a continuation play, you're looking for a certain kind of candle off of the 9 EMA. So for example, here, or the level. So the 9 EMA, the level, or certain the 21 EMA, just make it look like it wants to continue. So sometimes what you'll see is a candle like this, bearish engulfing candle off of support through the 9 EMA. That's enough to give you an area to use for your stop loss. So what you can do here, if you did re-enter here, you can use the 9 EMA now as your stop loss. And what you're looking for to cut your loss would be to find a candle that closes below the 9 EMA. So this is kind of like how you could have got in here, because it took a break. It gave you re-entry, and you can see it respecting that 9. So this candle here would have probably made people get out. Scalpers would have scalped puts from here to there. But if you're not worried about that, then you can easily use a hammer-ish candle like this off of your 9 as your re-entry, because it's showing that price rejected a level that it previously rejected. However, our 9 EMA is holding strong and it's giving us entry. So that's just one example of like how to find something at close and kind of like swing it into the next day.
Thanks for tuning in for part 2 of Swing Trading. If you're looking for a community that serves as a safe space, definitely check out our free Discord. Don't forget to like, comment, and subscribe.